You know, many investors or traders prefer technical or chartist analysis, while academics love fundamental. In this video, I'll briefly explain each trading style. A good trader should be familiar with both. Fundamental analysis is a method used to evaluate the intrinsic value of a company or security by evaluating financial statements, economic conditions, and industry trends. Fundamental variables include metrics such as the price-to-earnings ratio, where the higher, usually that means that it's probably overvalued. It could be that the public sees something in the stock, so that's why it's higher relative to earnings. In that case, it could be that there's some expected growth. Or the debt-to-equity ratio. Here we're thinking about examining leverage, like maybe more risk if it's higher. Then it's the current ratio or the quick ratio, where it's really the company's ability to pay short-term obligations. There is earnings per share, how profitable the company is. There's enterprise value. This is more comprehensive than market capitalization, where market cap is just the price of the outstanding shares times the number of these outstanding shares. So it's kind of like the size of the company. Then there's the return on equity or assets, which is how effectively the business generates profits. And there are countless more fundamental variables. We could do analysis, for instance, on the individual companies that comprise the S&P 400 or 500 or 600, depending on the number you want to look at. The bigger the number, the lower the entry we're talking about in terms of the size of the company to get into that index. And we can also connect to online databases using coding through what is known as an API or application programming interface for downloading stock tickers. Now, technical analysis flips the script. Instead of digging deep into financial statements, technical analysts focus entirely on price movement and trading volume. Chartists believe that everything that you need to know about a stock is already reflected in its price. Now you can get things like the OHLC, or the open, high, lows, close. The open, of course, being the opening of the day, the close being the end of the day, the highest point in the day, the lowest point of the day in terms of the price. There's also the adjusted close, which is more accurate because it reflects dividends and things like stock splits. There's also volume. And we can get a lot of this data spit out to us in what's known as JSON format, which is machine interpretable as opposed to human interpretable. Now, technical analysts use things like moving averages, support and resistance levels, chart patterns like head and shoulders or double bottoms, although personally I don't find much value in that. But that's just me. Even indicators like RSI for relative strength indicator, or MACD, the moving average crossover divergence, which are really just looking at momentum indicators here, kind of like the size and the direction of the movement in terms of prices. So the idea is that human behavior tends to repeat itself. So by studying past patterns, technical traders aim to predict future price moves. So how do they differ? Well, fundamental investors often ask, is this company overvalued or undervalued? Whether you're looking at fundamentals or technicals, the fundamental traders, they're really thinking about what they're buying a little bit more than the technical traders, although they both do care to a certain extent. But the fundamentals really is more about what you are buying. So looking at both, the truth is that many of the best investors and traders use a blend of both. You might pick high quality companies using fundamentals and time your entries using technicals. Think about it like picking the best car for a race and then choosing the right moment to hit the gas. So, whether you're a numbers person or a patterns person, understanding both sides can make you a smarter investor. So if you found this video helpful, don't forget to like, comment, and stick around for another video where we'll dive deeper into chart reading basics.